Hey, good morning. Let's go over today's trade plan. So in the overnight session, ES failed at that 92 to 94 resistance zone, and we saw a pullback down towards that 74, 75 high volume node that developed in the recent balance. At this point, heading into the open, sellers can remain in control as long as ES holds below 82 to 84. And even above that, it wouldn't necessarily mean that the market is extremely bullish, but it would tell us that the market is now simply in a balance and we could be heading up for a retest of 91.5 to 94, which is the next key inflection point. But if sellers are really going to maintain control, then this 82 to 84 area is going to be very key. On the downside, we've already tested that 74, 75 high volume node, and at this point, the market has rejected it and we're heading back up towards that 82 to 84. So at this point, when we go back down, we do have support at 69, 75 to 72, and that's really the only near-term support that the market has. But because we've already balanced in the overnight session, if we head down there, we are going to have to be cautious at that zone because at that point, that area may not hold, and we could be looking at a move lower. Now, if 69.75 to 72 breaks, that is really what would confirm the downside bias, and that's the zone where if it breaks, it can accelerate the downside, and we could see a short-term liquidation move down towards 1862, 57 to 59, and finally the extended target would be 49 to 51. So right now, that's really how this market is set up. How we react to 82 to 84 and 69.75 to 72 is really going to tell us where this market could be headed. In the event of a breakout above 82 to 84, we could be looking at a test of 91.5 to 94. That's the next inflection point, and a break above 94 would confirm the buyers in control, and that would bring the 02 to 04 and 06 to 07 resistance zones into play. And those are areas where sellers can still be active on first test, especially the 06 to 07 area. So those are really the main ideas heading into the day. The short-term bias at the moment is going to be bearish as long as ES holds below 82 to 84, and then we will reassess if the market breaks above that zone. And on the downside, 69.75 to 72 still has potential to hold, but we do have to be cautious there because the overnight session has been relatively bearish. And if we break below initial support, then we could get an accelerated move down to 62, 57, 59, and 49 to 51, with potential to even test 44 quarter to 46 quarter. That's the zone that can shut off the selling on the downside. So 44 quarter to 46 quarter is pretty key. 49 to 51 is pretty key support for buyers. So those are areas that can still be defended first test and actually provide some decent long setups on first test as well. And the market would be quite exhausted heading into those lower support zones anyway. So those are our main thoughts. Let's see if sellers can maintain control below 82 to 84, and we will take it from there.